Good. Welcome everyone to today's edition. Cash budget. Cash budget. Wow. Cash budget. Good. Now with a cash budget, it's just a budget that you prepare to provide an estimate of our inflows and outflows for the budget period. So basically that is it. All funds that you are expected to be received, all the funds that you are expecting, one side, all the funds that okay, good. So we will do continue. Okay, good. So when you talk about cash budget, it's just an estimate of your inflows and then outflows for coming forth year. So your inflows and outflows for coming forth year. So cash budget. Good. So cash budget. Your inflows and what? Outflows for coming forth year. When you say inflows, these are the receipts, the funds that you expect to probably generate versus the fund that you expect to incur or pay. So that is it. And just find the difference. Good. So that is it. Now let us probably discuss the advantage and some few challenges that you may have with what? Cash budget. Yes, with cash budgets. Good. Now, before we discuss that, we will probably walk through the format first. We should understand the format, how we want the presentation. Yes, the standard way or the most used or the widely one, the one that most examiners want. Let me put it right away. The one that most examiners want in examination, preferably your exams too as well. Now let's see. Now the budget period, it may be in months, quarters, weeks, days, years. That's the budget period. So if it is in months or if it's in period, so probably I'll put the period 1, period 2, and then up to the last period. So let's make it period N. Oh yes, so that's the budget period. Can be month 1, month 2, month 3. Week 1, week 2, week 3. Year 1, year 2, year 3. Good. Then you start with your receipts. All the receipts, one side. All your receipts. So if you should probably record all your receipts, all the receipts, one side. Now the receipts, there are many, but I've grouped them into 3. Just 3, then you are done. They are 1, cash sales. So cash sales, cash received from credit customers. So cash received from where? Customers. And then unique receipt, or let's call it other receipts. Other receipts. Good. So these are the 3 items that will form the receipt section, or the funds that you expect to generate, or the funds that you expect to receive. That is it. So first, cash is coming from where? Your cash sales. Yes, and then cash received from customers. Sometimes you may sell on credit. Then the credit component or the credit sales, you may receive it in patterns. So putting all together, that's the cash received from customers. Good. Then other receipt or unique. Normally I call it unique receipt or other receipt. Examples are interest received, dividend, loans, any other type of receipt at all, any other type of receipt, any receipt that you expect to publish or any amount that you expect to receive, which is not coming from your sales or coming directly from your customers, coming from the other source. So coming from other source. So example, loan, they can go for loan. It's a receipt, but it's not from customer. Good, or it's not from sales. Dividend received, interest received, or proceed from sale of what? PPE. Anytime you sell your PPE, the funds or the proceeds is also what? Other receipts. So you add it to it. Dividend, interest, and any other form of what? Receipt. So that is it. So you bring it here, so much, so much, so much, so much, so much, so much, just the amount. Good. Then you total it and get your total receipts. So total receipts. So that's the total. Good. Total receipts. Just align it once. Then what do you do again? Then start with your payments. All payments. All payments. All payments. Now, with the payment you go through 4 items. Yes. Basically, there are 4 items. 1, cash purchases. Most exam question, we don't normally give cash purchases. Yes, normally. Because normally the company buy all their goods bulk and then pay them later, little by little. So that is it. Good, 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 good. So that is it. Now, so much, so much, so much. Good. So that's the cash purchases. That's the cash purchases. Then from cash purchases you go to cash paid to suppliers. Cash paid to suppliers. So cash paid to suppliers. So that's the cash paid. That's the opposite of the cash received from what? Customers. Now we are paying to what? The suppliers. So that is it. So that one too, so much, so much, so much. Then we go to expenses. Expenses what? Paid. Expenses paid. Expenses paid. So expenses paid to, it will be something like this. Expenses paid. Yes, you can put your questions crossboard for me. Then I'll pick it up. So that is it. Expenses paid. So much, so much. But please, here, we don't want the expenses incurred. We want the expenses paid. There's difference between expenses incurred and expenses paid. Good. So the expenses incurred, it may include 1, non-cash item, 2, owings, 3, less of prepayment. We have to reverse all this. So non-cash items such as what? Depreciation. If there's depreciation in the expenses paid, then we have to what do you have to do? Knock it down. So we less it. So from the cash flow perspective, the same rule that we did, or the same rule that we saw under the cash flow should apply here. Should apply here. The expenses paid. So that is it. Good. Then here too, you have other payments. Now, other payments. So other payments that are not payments which are not coming from your purchases or not paid to your suppliers or not expenses, the other form of payments, probably. Example can be what? Loan, repayment of loan. Repayment of loan. And then when you acquire any PP or when you probably invest, so that's the other payment. Sorry, other payment. So with the other payments, it includes what? Any payment that you are going to probably do or render aside these three items. So it includes repayment of loan, acquisition of non-current assets. Anytime you go and buy non-current assets, it forms part of the other payment. Yes. So that is it. Just that these two items, other payment and other receipt, they don't occur often because you can't be buying non-current asset each and every month or each and every year or each and every day. No. So for that one, normally just once. Good. Something like this. So it means that the other receipt too can be something like this. Yes. So here will be dash, dash. Good. So that is it. Now, when you are done with the other payments, as usual, you sum it up and get a total payment. Total payment. So total payments. All these ones are expected. Yes, budget questions are for forthcoming period because we said budget toward planning expressed in monetary terms. So we are planning ahead of time. So all these ones are into future. So normally, if you are going to write in October, your budget question will move like the next month ahead of you. Yes, the next month ahead of you. So to be November, December, January, or October, November, December, January, in that order. If you're writing probably April, then your budget question will be April, May, June, or May, June, July, in that order, because budget is like for forthcoming period. So that is it. Now, right after the total payment, what do we do? Now, what you are going to do is the heartbeat. So now be with me. This section is the heartbeat. What do we do? Total receipt, the expected receipt for the period one, less what? The expected payment, the total of it. So this minus this, we call it surplus or deficit. So surplus slash what? Deficit. Oh, yes. So what do we do? This less this. If the answer is positive, we will call it what? Surplus. So take notes. The answer is positive, we call it what? Surplus. Negative, that's the deficit, and then in that order. So 2, 3, 2, 3. So it will be this minus this in that order. So to get the deficit or the surplus. Good. Now when you do this, then bring the open balance of your cash. Open what? Balance. So they have to give you the first budget period open balance of cash, which is the same as the closing balance. So if you are starting your budget in, let's say, October, then it means that they have to give you September cash balance, and then we roll it over to what? To that of October. So that is it. So the open balance of the cash. Now, when you put the open balance together, it will give you an answer, and that answer is the final one. And that one we call it what? Closing balance. Okay. So if I want to get the closing balance, it's nothing by what? Adding the surplus for the year to that of the open balance. It will give me the closing balance. And this game will continue until you are done. And this game will continue. So you push the closing balance for the first period becomes the open balance for the next one. So you'll be pushing it until you are done. So something like this. Let me do it well. So something like this. You push it here, you get your open balance, then you are done. So this is how the cash budget is being prepared. Yes, there are several alternatives, but this is the exam standard type, or this is the one that we want in exams, because the one that show your surpluses, you can use your surplus for decision making. It's very important, the surplus. So the surplus is very important. The one that spells out your surplus is very important. So take notes. This is the important session. Yes. So that is it. This style or this approach will let you know your surplus, whether next period or whether the budget period you'll be receiving more than the payment. Yes. And then the amount of surplus that you probably derived or obtained, or the amount of what deficit that you are likely to incur, so that you make decisions ahead of time, put decisions down. Okay, so that is it. Now, when we prepare the cash budget, you may be asked to interpret or explain your cash budget that you prepare. What's the meaning? Because what we've done is just numbers and figures. What is the actual meaning? We are not going to use ratios to explain that. Now, you are going to use these items. It's a surplus and a deficit that you are going to use to explain the cash budget. So that's why it's very important to show your surplus or your deficit in the cash budget preparation, because that's what you're going to use to interpret what the cash budget. Good. Now let's see how we will do the interpretation. Now, the interpretation, we want 4 items from you. 4 items. 4 items from the interpretation. Anytime you are interpreting cash budget. 1, when they should go in for overdraft or when they should go in for loan. So when the entity should use overdrafts. Good, that's the first one. Second, the amount of overdrafts, the maximum amount. Should tell us the maximum amount. Maximum amount. 3, tell us the repayment time. The period of the overdraft, when it should be repaid, the repayments. And lastly, tell us when they should invest the surplus cash flow. When they should invest what? Invest the surplus cash flows. Surplus cash flows. Because basically what we are talking about is this. Anytime there is surplus, how are they going to manage the surplus? Are they going to keep the cash and protect the cash? No. It is not reasonable, or a rational businessman will not do that. That the whole year you had 500,000 Ghana cedis and you are keeping these 500,000 Ghana cedis. Probably you take decision with it. Are you going to invest? Are you going to buy asset with it? What are you going to do? So that is it. Just that if not gotten this 500,000, you are anticipating that a year or in the next coming period, I'll have 500,000 Ghana cedi surplus. So what do? Okay, so when I get that money, instantly, I'll buy a fixed deposit, or I'll invest, or set up my new business somewhere, so that at least I'll get some return on the investments. So that is it for decision. Now, when you had or you get deficits, how are you going to finance the deficit? That's the deficit financing, or the liquidity challenge. Liquidity challenge. How are you going to mitigate your forthcoming liquidity challenge? If you know that the year ahead of you, you go through a lot of cash constraints or liquidity issues or liquidity challenge, then you make your decision in advance that, okay, Then prompt your bankers. That's a year ahead of me. I'll make a lot of payments. So please make avenue for me. I may probably request for overdrafts, probably between an amount of 50,000 to 60,000 cedis. So that would be the range. So kindly be aware. At least it will probably prompt you or make you alert, and then you avoid certain risks and uncertainties than to wait so you have the deficits and now you start scratching your hair that you didn't make any provision for it. So that is it. Now let's see how you use the cash budget. So when we solve the first question that we will solve, we will use these three items to probably explain that. So first, when should the entity go? When should the entity go for probably overdraft, or how the deficit should be financed? One, anytime there's a deficit, you have to go for what? Overdrafts. Oh yes, because if you have cash, will you go for loan, top up? No, because the extra one that you are going for may not be what advisable, or may not be like needed because you have money, you have cash there, so it does not probably make sense for you to go for another loan and protect your own and be paying interest. So you only have to go for what? Overdraft when you have a deficit. Good. So that's the first. You've answered it. When there's a deficit. Two, what's the maximum amount they have to give it to you? The maximum. Yes, the maximum amount is the closing balance for that period. That's what they will give it to you. So the maximum amount, the bankers. You may request any amount at all. Probably when the bankers, when they pick your cash budget and analyze it, they won't give you what you are requesting for. They will give you what they think is good for you. Oh yes. That's why when you're going for the overdraft or when you're going for loan, they'll ask you to bring your 3 months or 6 months cash forecast for them to analyze your inflows and outflows. When they realize that you won't have enough money to pay off your overdraft, probably they will limit it for you. Don't give you the amount that you want. Good. So the maximum amount, that's the second point, the maximum amount. The maximum amount. So with the maximum amount, it should be the balance what carried down, or the closing balance. Yes, the closing balance, because we can't give you more than what you can generate. So at the end of the day, you have to check the balance that you can generate for us, so that we won't give you more than that. Because if you give you more than your closing balance, you may end up not paying us. So that is it. Good. And then the period, the duration. When are you going to pay back? When are you going to pay back? You have to pay back exactly or immediately when there's the next surplus. The next what? Surplus. So if here there's deficits and here there's surplus, then I will pay it here, because that's when I have a good balance. So that is it. That's where I have a good balance. So the next payment or the repayment or the period of the duration of the facility probably to finance your deficit should end as soon as there's a next surplus. So take note. And then invest the surplus cash flow. Oh yes, where you have a surplus, you have to invest. You have to invest where you have a surplus cash flow towards an interest yielding investment, not just investment. Not just investment. Don't go and put your funds there and then at the end of the day, the return, no return, not at all. No return, no. You're not an NGO or government. Even to some extent, government even invest some of their funds into investments or highly return avenues. So take note. So you have to invest the surplus funds into what? Into return yielding investment. So that is it. Good. So this is the analysis. Now with this, everybody should tell me, at least either tell me two important or uses of cash budget. So tell me two important of cash budget. That's the importance of cash budget. Why should entities waste their time to prepare cash budgets? You are here and then telling yourself that next 3 months, I'm going to receive this amount. I'll pay this amount. So I will lack by this. So I need 1,000 Ghana to finance the difference. So what will be the importance of such analysis? So let me have your own. That's the importance of what? Cash budget. Let me have yours. Say yours first, so before anybody pick your own. Okay, so someone said it's a planning tool. Someone said that it's a planning tool. Can you explain further why is it planning tool? Okay, so for planning, right? Okay, so it's for a planning tool. I'll take that. This cash budget for planning. Yes, so for planning. So if you realize that next year you will have a lot of payments, then you have to make some decisions to probably or strategies to combat that. Any other? Let me pick your own. No. Helps the entity to cater for what? Cater for risks or uncertainties, right? Okay. So risks and uncertainties. Yes, it will reduce the impact. It may reduce the impact of the risks and uncertainties. Yes. Because when there's a danger coming, you probably know. When there's the danger coming, you probably know. Though it may not cater all, some of the transactions are unique. Once the other receipts, I normally call it unique. Though some of them you may not know, they may arise. Yes, so you may not have any idea, or there may not be any indication that you're going to incur that too. So for instance, nobody thought that 2020 year we'll be buying a lot of sanitizers. Yes, so nobody placed that one in the budget. So such uncertainty or such risks will still persist, but most of them will be curtailed. Yes, most of them will be curtailed. Good. And let me pick other ones. Someone also said that it helped to adjust one's cash position. One's cash position. How are you going to adjust that? Okay, so it's for decision purpose, for decision making purposes. So for decision making purposes, and then once is for planning. The end product of planning is the decision making. So for decision making purpose, because cash budget will let you know whether you are going to receive more cash next period or pay more cash. If you are going to receive more cash, then you take the decision in advance. Okay, when the money comes, I'll do this and do that. Please don't wait for the money comes before you are going to think of what you're going to use the money for. Other than that, the money will have probably a decision for you, a use for you, because if you are going to the market, you have 1,000 Ghana cedis with you, you go to the market. When you are going to the market, you don't have any plan, any idea of what to buy. As soon as you go, anything you see, you buy. So the money will probably dictate for you. But if you jot down something like a cash budget, okay, I'll buy this, I won't buy this. Okay, I have to spend this. When you go, even if it's cheap, you still, because you have a purpose, you keep to your decision. So for decision making purposes. Then what again? Let me go and pick the other ones. Helps the entity to know when to probably lend or borrow money or to invest the surplus. Okay, so that's the decision. So that's the decision. It will probably tell you when to go for loan, when to invest the surplus, when to use deficits, when to finance your deficits, or the medium, whether to use overdraft, medium-term loan, or bonds, or even rely on your short-term credit being given to you by your suppliers. So that is it. So someone also said helps to forecast. Cash budget. But cash budget itself is a forecast. Yeah, it's a forecasting because we make use of forecasting techniques. Because how do you get these sales? You forecasted that next period coming, I will sell so much. So the cash budget itself is a forecasting technique. So what are you going to use the forecast for? Probably if you are going to use the forecast for your future cash position, fine. But if you're going to use the forecast for the various item, it's a forecast because all of these items are estimated item or expected item. They are not actual. So that is it. So probably to help you to forecast your cash position, your cash flow position. Yes, or your liquidity position. I'll pick that one. Probably help you to forecast your liquidity position. Good. It also gives the firm the detailed cash receipts and the expense of the firm. Okay, I'll take that. Detailed cash, all of them box to your liquidity position. Yes, so give advantage for you to know your receipt and payment. Yes, for forthcoming period. For forthcoming period. So what again? Please do well to add your own. Oh, yes. That's the one way for me to know that yes, you are run. Cash help avoid shortages of cash during period of what? Company counter high number of expenses. Okay, so the cash budget will probably help the organization to avoid what? Cash shortages in a period of what? High payment. Good. So yes, to let you know, and they make the decisions in advance. Thank you. I'll take all the points. Say it enabled the company to establish credit to extend to avoid liquidity issues. Yes, it can also help you to probably amend or take decisions in connection with your credit policy, probably your customers. If you realize that the cash, you need more payment, then you can tell them to probably pay on cash basis or reduce the credit that you give it to your customer so they can receive your cash on time. Good. So that is it. But all what you said, yeah, brilliant. Now, can you probably tell me just one limitation of what? Of cash budget? Just one limitation. Yes. You have to also discuss the limitation or the challenge that you have with cash budget. The challenge. The challenge. So any challenge with cash budget, assuming that the customer, you are a credit control manager, a customer probably presented a cash budget for a facility, and then you will be asked to probably analyze. So analyze the challenge or the limitation of this cash budget. So what will you tell us? The limits or the disadvantage of cash budget. Despite the good side, oh yes, there's some little challenge that we have also considered that. Because one, all these items are what? Estimates. Yes, they are estimates. And estimate may be different from what? The actual or the reality. So if you have estimated that you are going to have surplus, that does not mean that the actual period you get surplus. It's an indication. It's an indication that you may get surplus. It's an indication. So take note. So cash budget is an estimate, which might be different from what? The actual or the reality. Yes, so it's an estimate, maybe different from what? Actual or reality. Yes, so that's my first point. It is not possible to have all your customers paying their debt, and that will distort your projections. Oh yes, so that's the estimated amount being different from the actual. That's one cost of that. You are say that, okay, my customers will pay after allowing for bad debt. Even the bad debt that you've allowed for might not be the actual bad debt, or the provision that you've made for might not be the actual. So you end up either overestimating or underestimating. Good. So that is it. I'll take that. So first, estimate. estimate, which may be different from the actual. All the figures, all the items are estimates. So that is it. Except few of them. Okay, we can also talk about unique transactions. Unique transactions, like I explained, some of the transactions, they don't give any indication. You have no idea that you are going to spend funds on PPEs. No, nobody thought of that. So it was not even added to the cash budget of most companies. That's last year. Nobody added that, okay, this year we are going to probably buy a lot of sanitizers, a lot of nose masks, and then the other PPEs. So unique transactions or unique items may distort your projections or may render your analysis. I've muted myself. Sorry, I've muted myself. Wow. Okay, so that is it. Again, that was the question, right? That was your question. Okay. Okay, so let's proceed. So we are talking about the unique transactions. Yes. May distort your cash budget. Yes. And then cash budget also assumes that it's a forecast, and all forecasts assumes that the past transactions will provide a reliable guide in future. It assumes that the past transactions will provide a reliable guide in future. So what has happened today will probably set as precedent or will probably provide a reliable guide in future. So if you are in 2019 and compare 2020's budget, whatever happened in 2019 will probably should provide a reliable guide in future. In reality, this one is not true. It's not true in reality. Oh yes, because in reality, transactions can occur like at any time. There's no indication. There's no past reference to some of the transactions that box on the unique transactions. Good. So 2019, is there any indication that 2020 will be a very very terrible year, troublesome year? No, there's no indication like that. Meanwhile, that was the impression behind the cash budget. Good. So that is it. So these are the few challenges or the issues that we have with what cash budget. You can think of your own. You can let me know if you have yours. I hope everyone can hear me now. Good. So now that we know what cash budget is, and then the advantages, disadvantages, and we know even the format, can go ahead. Now, when you take the handout, question 1 is your homework in advance. Yes, so question 1 is your homework in advance. when you take the cash budget handout. So let's go and pick our next question and do justice to it. So let me see cash budget. Okay, I will solve Abigail a champon or a champoma. That's the ICA November 2017. That's the first question that I'll solve under the cash budget. Then I'll solve the next one, and then last sitting's own. It came last sitting. Let me tell you in advance, budget questions are not straightforward. They're a bit complicated and tricky because of the forecasting technique. They are not actuals. You are making predictions. You are making estimates. And this estimate, you are not using your judgment. The examiner's judgment. How you will predict items not the same as how somebody else will predict. So it makes it a bit difficult. Yes, because if we should tell you these two items, the cash received from customers and cash paid to suppliers, these two items, how you arrive at them is very difficult and very tough. So my advice is this: when you go and that's two items are worrying you, why not? Just leave them. Leave these two. Do the other ones. When you are done, there's time, put them in, and then you are done. At least that one is far better. Within like 10 minutes, you can fill the other section and leave these two ones. Do some small workings, something to represent something, you are done. You put it there. Got the mark that I have pegged there, maximum of 15 marks, range from 10. So if you get 10 marks there or 15, I'm fine. Not the 20. I know where you have to get 20 over 20. That one, don't leave any chance or not even a mark. Okay, so someone said that should probably go over the unique transaction. Here we are saying that the estimate that you have probably determined or prepared for yourself, it may be different from the actual, or unique transaction may distort your analysis. Unique transactions that never repeat themselves. They occur once a while, or once a year, once a month. They don't have any pattern or any historical pattern that, okay, once every 3 years, there will be a disaster in my organization. So you have to make a provision for it. After, okay, there will be a disaster and we may lose like 1,000 Ghana cedis. So let's put 1,000 Ghana cedis there. No, there's nothing like that. So one, there's no indication. And most of the terrible ones, they don't provide any indication. So you will not account for it in your coming forth budgets, except for if they announce worldwide that everybody should be careful. The entire earth is not safe in 2020. If there was something like that, the entire earth is not safe in 2020, you may lose a lot of your investments. So everybody should make provision. Such one, there's an indication. But look at what happened in 2020, the pandemic. Nothing suggests. There's no indication, or there was no indication in 2019. So when you're preparing the 2020 budget in 2019, there's no indication that you are going to incur much on medicals, probably for organization or PPEs. So in a way, it may distort. It means that the actual cash that you are going to derive will be definitely different from what your cash budget. And then once it's different, any decisions or the analysis that you make from it may also be invalid. That's what we are saying. Good. Okay. The connectivity, right? Good. Please let me know if it's a bit okay. The network. Wow. Yeah. It's unstable here. Okay. Is it okay now? I hope everybody can probably hear me. Okay, so I think it's fine now. So let's go and pick our first question and do justice to it. Our first question and probably do justice to it. Our first question. Question one is yours because it is what? Empty. Question one is yours. So I'm doing question 12. I'll do question 12. Okay, we did question 12 last week, so I'll do question either 13 or 11. The question that states Abigail a champon. So that's what we are going to do. Good. So question, I don't know the question number, but the name is Abigail a champon or a champon, something like that. So let me see, question 13, right? Okay, so that's question 13. So if you have the soft copy, you can probably open, or I will share mine on the screen for you. Okay, so Abigail Champman, where are you? Where's mine? I can't find mine. Okay. So let's see how we will do that question. Okay. Good. I have mine here. I have mine here. So still the line is breaking, right? Wow. Oh, think it will be fine. I have to change the network and see. Good. So now let's go straight to the question. If you can hear, still, wow, still. Okay, so now let's see the question. Let's see the question. So question 13. So the format 2 has been provided for you. So question 13. Wow. So question 13. Abigail a champion or a champion. Good. So it's Abigail a champion. That's Abigail a champion. Okay, there will be a short class test here. Oh yes, very short one. Very short one. It's not difficult. Please, it's not difficult at all. Very short one. Short one. It's on the functional budget, because sometimes before you can prepare good cash budget, you have to go to the functional budget first. Yeah, so that is it. So have you seen the A part? Okay, so start work, the very first part, the I, the first requirements. If you have yours there, those who have printed it out, good. Okay, so now let's go to the requirements. Required. Calculate the purchases for each month from October 2017 to December 2017. Start work. It's 3 marks, so I'll give 3 minutes. So 1 minute got 1 mark. Good. Oh, we should read through. I've not been fair. Okay, don't worry. Where we saw functional budget, sales budget, production. A manufacturer will produce, but a trading company will do what? Will go and buy the goods and sell. So that is it. Good. So let's see. So the whole question stated that Abigail Champon is in the process of preparing budgets for the period October to December 2017. The following information has been provided. 1. Budgeted monthly sales revenue is as follows. So they are there, October to January. Good. So you should know the budget period. The budget period is October to December, 3 months. This is ICA November 2017 past question. Yes. So that is it. Now sales are 20% cash and 80% credits. Wow. So it means that our cash sales will be 20% of what? Of the sales. Yes, our cash sales is 20. So sales are 20% cash, 80% credit. Good. So that is it. Now credit sales are collected over a period, over a 3-month period. 15% in the month of sale, 70% in the month following sale, and 15% in the second month following sale. Bad debts of 5% are anticipated on all credit sales. So probably I'll explain bad debts for you. I'll explain the issue of bad debts in this, because it normally worries the cash received from customers, and we have a way of bringing the bad debt in. Good. So that is it. Now let's move on to the next note. The total sales revenue in August amount to 30,000, and September's total sales revenue amount to what? 36,000. Good. Then the next note says that cost of sales is expected to amount to 60% of sales revenue each month. Okay. So if you want to get the cost of sales, just pick 60% of each month's sales. Then you are done. You get the cost of sales. Okay. Now let's see the game. The business maintained its closing inventory. Its closing inventory levels at 75% of the following month's cost of sales. So it means that the closing inventory of the current budget period is 75% of the cost of sales of the following, the next month. So in that order. Remember that question 12 that we did last week have the same terminology in there. So it's like a advancement, right? Okay, so that's fine. Now let's see. Inventory at the beginning of October is expected to amount to what? 18,000. So the opening balance of the inventory is what? 18,000 for that of October. So that's the first budget period. That is it. Now let's see. 50% of inventory purchase is paid in a month of purchases. The remaining 50% is paid for in the month following purchases. So it's like half. You pay half of whatever you acquire today, and you pay the remaining percentage what later. That's the 50% the next month. So basically that's it. So you just have to split it equally. As at 30th September 2017, amount owed for purchases are 11,700 Ghana cedis. So it means that this is the second half of September's purchases, which will be paid in when? October. So but the budget period is October, November, December. So the owings from September that will be paid in October. That's what they are giving to us, and very important. Normally in the extreme difficult situation, difficult questions, they won't give it to you. So probably we'll try as much as possible to, to compute all these figures. It's possible you can compute all of them. The open balances, when happening that way, we will give you enough information that will help you to calculate the open balances. If such information is not given to you, then you can't do it. Then we have to provide it to you. You have to give those information to you. So take note for us. Okay. Now let's move on. Which notes? Now note the next one says a grant of 20,000 is expected to be received in mid-October. A grant. So grant, which section will it form? That's other receipt, right? Grant is other receipt because grant is not in the form of cash sales, not cash from customers. Your customers not give you grants. So that is it. So it will be other receipt. But they say mid of what? October. Are you going to apportion it or share it mid of October? Where are you going to place it? But whether end of October, beginning of October, or mid of October, there's October. So you should go to October. That's all. You put an October. So they made it part of the game. Have you seen? Oh yes. Because then the next note says that second-hand van, which cost 8,000 3 years ago, is expected to be what? Sold in December 2017 for 3,000. At this time, the expected net book value, that's the current amount of the van, is what? 1,800. Here they have given us three figures. Let's see something here. In fact, the idea of cash flow statement also moves in here. Also moves in here. Good. We have an asset, second hand, that we are going to dispose it of. The original cost is 8,000. That's the cost 3 years ago. Now the current amount, see, is 1,800. You are going to sell it for the proceeds of 3,000. Now tell me, which of these three figures will appear in our cash budget? Which of these three figures will appear in our cash budget? Will it be the 8,000 or the 1,008 or the 3,000? Type the one that you feel like, I like that. It's 1,008. I like that. Yes. But any answer is valid until the final marking scheme is reviewed. It's 1,008. Oh, okay. I like that. 1,008. 1,008. Now I have 2,008. Is there any other one? Currently, we have an asset. It cost us 8,000 3 years ago. We bought it 3 years ago at what? 8,000. Today, the value is what? 1,008. But you're going to sell it for 3,000. But you're going to sell it for what? 3,000. So which of these figures should we have to include? Any other 3,000? Okay, so I have another one to here. 3,000. 3,000. Okay, still. Yes, 3,000. 3,000. Yes. In fact, it's the 3,000 because that's the cash flow. That's the cash, the actual cash that we are going to receive from the sale. That's what we have to key in, not the cost, not the carrying amount. So you have to key in or the 3,000, the proceeds. So the question is, now if we need only the 3,000, then why did the examiner give us all this information? Yes, like I always say that overflow information is allowed. They have to give you more than what you need. Just I have to pick what will solve or answer the question is specific. So if they are giving you a lot of information, that does not mean that you should use all of them. So the one that will satisfy, you have to go in for the 3,000. Good, 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 good. I like your answers. Now let's move on to the next note. Now the next note says that equipment costing 4,500. Equipment costing 4,500 will be purchased and paid for in November 2017. The equipment will be depreciated on straight line basis over 3 years. So I'm going to treat this. The cost of the equipment is what? 4,500. It will have a 3-year useful life and to be depreciated on straight line basis. So how are you going to do this? In fact, all what we need is the cash flow element. That's the 4,300. So we only have to treat the 4,300 as what? Unique payment or other payments. That's all. The next note says that operating expenses are paid as incurred. So you paid your operating expenses as incurred. Don't forget that is the paid one that we want. You should exclude all non-cash items. So that is it. Now they are there. These have been what? Estimated as follows. Estimate as follows. The above figures. So October is there. November 2 is there. December is there. The above figures include depreciation on existing assets of 2,000 per month. So what do? So all the operating expenses that they've given to us, it includes depreciation of the existing assets of 2,000. So we take it off, right? Because depreciation is non-cash item. We want the cash expenses that we are going to pay, not non-cash, not the provision, not the mere allowances that we are probably putting it in our book. Good. So take note. Then the last note says that the cash balance on October is expected to be what? 8,000. So that's the open cash balance. Okay, so now 5 minutes start work for that of the purchase figure.